All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Hope you had a fantastic weekend. Market this morning showed pretty much what it has been doing. We have seen market futures move overnight during the Asian and European sessions. And then here in the U.S. session, yeah, we get some chop through, but no real material movement. And tells you something about what's driving things. And it's global markets right now that are driving things. And that is, common from time to time. And we'll see, the U.S. markets drive for a while, and then we'll see if global markets drive for a while. It does seem like the global markets are driving a little bit more in terms of that bus right now out there. But let's get to the challenge here. We went into the weekend in cash, no positions as we hit the time stops. Yes, I realize what gold has done today after hitting its time stop Friday, and nothing that we haven't seen so many times during this challenge already. And yeah, not real fun, but is the reality of what we're dealing with. FCX twice has done the same thing to us, where we get a nice signal, we trade it, we hold it, end up getting time stopped, and boom, the stock takes off. We have seen that a lot this summer. Hasn't happened with everything, right? Bank of America hit its time stop Friday, and it's down 1.5% here today. But yeah, definitely continuing with that theme of, hey, time stops and then big move. And I do expect that to be the case, as we go further this summer. I don't expect that to change, and we've talked a lot about it. I'm not going to make any adjustments based on it, just because it does bring zeros into the mix, right? But it's something, if you have the risk appetite for it, to keep in mind there. As far as for the challenge today, there are some crossovers, but no new signals. We have downside crossovers on Dollar General, General Motors, J&J, and JP Morgan, all with downside crossover action here, but no bearish signals on them. Consolidation risk on them is very high. And then on the upside, we have Chipotle and FCX. I wasn't expecting FCX to trigger, and it's not triggering here. Consolidation risk number is high. This had a few crossovers of late. But I thought Chipotle had a chance of triggering. In fact, I went and priced the options out. It would be difficult for us to play, but it is not triggering here where it sits, at least so far. But anyway, so we'll go into the close here today in cash, as there are no new signals on the board. Overall, the market action, the market vibe is still bullish, but we had a 5, and we still see a bullish market, but let's face it, we're not talking about a rip-roaring bull market where the market's just going up each and every day. This has been a really kind of stuck in the mud type of bull market, and where most of the gains have come on a gap. And, outside of that, yeah, we've had a decent little reversal day, but overall, yeah, just not a heck of a whole lot to the movement here with the overall market, but still in a bullish position. I'd argue there's some pretty heavy consolidation risk right now, but we'll be interested to see the action tomorrow, because if you'll notice, we're trading below the 7-day moving average, and we really haven't seen 2 days below the 7 since June. And, when we saw that, yeah, we had a reverse, we had some upside days, but overall, track lower until the move above the 7, and then higher. We had a little bit of that type of action back here in June. But this type of action in May, where we just kind of get a few days below the 7 and then pop back above, that's what we have seen most of the year, except for this February-March sell-off. Outside of this, we have seen 3 or 4 or 5 days below the 7, pop back above and market carry on. So, what's likely going to happen? Well, that is the more likely scenario based on, 2020 so far. But we do have some negative divergence in some of the indicators, momentum oscillators that's coming in. It's not too uncommon to see a little summertime sell-off, in the August time period. And so we'll kind of see how things play out here. I don't think that we're talking about money managers too much in a need to make big position adjustments, but obviously the stories just continue to be the same. It's the political here in the U.S. with the some of the stimulus bills and stimulus packages. We still have COVID underlying, a lot of things. We have central banks, just pumping huge amounts of money into the markets. So the main stories are they're not really changed here, and they haven't changed all month, and they're probably not going to change all month. And they're probably not going to change in August, but maybe for a week. And I think one of the biggest changes, though, is kind of last week we see a little bit of tech pullback that we haven't seen in a while, and a tech pullback that does suggest a little more consolidation. Now, you take a look at a stock like Apple. This is something I went and bought this morning personally, and it's just one of these charts where it's an easy trade in terms of where to go and adjust. You basically use today's low as your stop point, and you look for a bounce back to the kind of 390 to 393 level. So I went and put it on. But nothing too serious there. The options are pretty expensive with earnings upcoming. But we have a lot of those types of charts, and they just look more like consolidations rather than trends here. Now, speaking of trends, gold has been on a monster trend. And, we've talked about gold. I'm not going to rehash everything on gold. And, we started talking about it last year when it had this breakout off of the monthly chart, and just talked about the factors that would drive gold higher. And we get the breakout last summer, and it has just been a monster move here for gold, up over 50%. And one where the story continues to improve, and where the story is not overplayed in any way, shape, or form. And I still believe that is the case. I do not believe that the gold story has weakened. I don't think it has been fully put into play. I don't think we're talking about something where it's done here. But I did go do something here today. And I went and I trimmed half of my entire gold position. Now, what does that mean? Well, for me, it meant selling quite a bit of GLD. I closed my entire Harmony position, HMY, just closed the position out. And then that leaves me with some GLD, that leaves me with some AUY, and that leaves me with some GOLD from an investor standpoint. But the entire position size cut in half. And this is something that, when I look at what gold is doing right now, you take a look at the MFI, we're pushing above 80 here on it. That's a pretty extreme zone, for anything when we start to get into those levels. Then the big gap up, this morning after the run, you can see the CCI getting up here to around 230, 240. We're just hitting a pretty high extreme on a lot of our oscillators, a lot of the momentum indicators. And I understand I could be pulling some off early, but, at the same time, it's one where I'd rather add the position back, or the other half of the position back, after, kind of a deeper little pullback. And I don't know if it's coming now. I don't know if it's coming next week, or maybe it's not coming at all. I don't know. I don't have any special insight into that. But, we talked about Bank of America back when it did the same thing with some of the oscillators and with some of the, kind of the momentum that it hit as it came up to the 200-day moving average. And yeah, it looked beautiful and, had ripped higher, a nice big gap up. But that was where I had to say, okay, time to trim some. Gold itself, the GLD, is from a technical standpoint, I believe, a little more overbought than what Bank of America was. But, if you know anything about commodities or trading commodities, commodities can stay overbought for a very, very long time. Okay, so it's just one of those where, overbought, oversold, and the commodity space is a little different than in the other spaces out there. So anyway, I did do that here with gold, and probably not something I'll put back on for another. I won't put that other half position back on for another 3, 4, 5, maybe 6 weeks. We'll just kind of see how it all plays out and what happens. But I'm not going to be staring at it every day going, ooh, do I put it back on? Do I put it back on? Now, I'll need to see something a little more material and pullback in a similar way to what we saw in Bank of America. After I pulled half the position off and, we finally got a pullback, it managed to happen over the next few days. But, it is something where with gold, I don't have any sort of expectation of when. I just know it's time to lock some of that in and, wait. Just wait a little bit. But at the same time, I'm not pulling the entirety of the position off. This is something where I think it's a 2 to 3 year story. So I'm not getting too aggressive there with, trying to just simply trade it overall. Okay. If we go and we look at the challenge watch list here, and we look at the stocks on the watch list, there's some good potential for some signals to come in here this week with with crossovers. And so while we don't have any today, we do have a lot of differentiation in charts where we have just a lot of different looking charts out there that could ultimately even put us into some puts and some calls at the same time, or a call and a put at the same time, based on how things are trading out there. And then some of these things like a Boeing. This is something that I have from an investor standpoint, and it has shown these kind of two little pops that have been sold. And, it's coming and testing 170 again and testing it again on lower highs. And lots of times these things will break down. Now, I do believe if it breaks down, we'll see it snap back up, and I think that'll be a nice buy position. But oftentimes we will see that. We saw Boeing do this a little bit in April and May. Did break into a new low where we saw buyers come in. So I'll be very interested to see what happens there. But, you can see as I just kind of scroll through, we do have a lot of different looking charts out there. And, stuff that we can't look and say, oh, everything looks like Alcoa again, like we could, 6 weeks ago. We do have a lot of nice, different looking styles coming in. And, this does increase some of the chance for, for challenge signals to come into play here. But nothing on the board here for this afternoon. All right. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you tomorrow. Take care.